So now we're going to be working on the break-even and target profit portion of the project. We've already done a budget and an income statement for producing just kefir. And then we did a budget and an income statement for a mix of some kefir and some cheese. And now we're going to do break-even and target profit projections for just kefir, and then kefir and cheese at the sales mix on the input page, this sales mix that was indicated that could be changed. There are some calculations in here, but some of them, as you can see, are not quite right. So we're going to just eliminate the ingredients. And of course, this is, as it's indicated here, just a 6-month break even. If you did a full year, you could, of course, do this for the full year. So total fixed cost we can get from the contribution margin income statement. And then the contribution margin per case will be the total contribution margin divided by all the units that you have in the 6 months. In parentheses, and then enter. And so then that would be 223,077 cases every 6 months. Okay, so let's just keep a running total here. How many cases did they sell? Let's see. We can just round that to the nearest case. All right, and how close are we to break even? So as you can see here, from the first 6 months, we're below the break even level. And of course, we already knew that because profits are negative. We're at a loss, so we're below break even. So that's all looking consistent. And then the client wants to replace their salaries. And so the question is, what is that target before tax? Let's get the break even in dollars before we do that. Our contribution margin percent is the contribution margin divided by sales. Okay, divide that out. The before tax target is the sum of the salaries of the two individuals. So the 125,000 twice. So how many cases, that should be target in cases, so please fix that. Would you need to sell in order to cover not just your fixed cost, but your fixed cost and the 250? So we'll add the fixed cost to the 250. Contribution margin per case is the same. So in order to reach your target, you would have to get 179 cases. All right, and then you know what would you have to sell in dollars? Quite a bit more than where you are now. What's our sales level now? 5.5 million about. So you're pretty shy of break even in dollars and way shy of being able to replace your salaries. At least if you make just kefir. Let's do the same analysis now with a 13% of your cases being converted to cheese. All right, so the fixed cost is the same, I believe. Yes. Okay. The contribution margin per case will be different because the contribution margin for cheese is not the same as it is for kefir. So the contribution margin divided by the sum of the cases sold. All right, quite a bit different. this comparison in here. All right, so break even in units. And then the fixed cost is the same. The contribution margin, we can calculate that, would be the contribution margin divided by sales. Before tax target is the same, so now we have the fixed cost plus the target and the different contribution margin per sale, per case. Okay. Copying and pasting the formulas there. So I just noticed that the current volume in sales under these two scenarios is not the same, and they should be the same, or at least within rounding. So let's go fix this, and it gives us a nice opportunity to see why creating this live model is so helpful. So let's go back to the plus cheese. Let's go up here to the sales. And this formula here takes last month's sales and adds 1% of last month's sales times the ratio. And really, this ratio is already reflected in the very first calculation. So we just need, we're going to replace it, last month plus last month times the growth rate. And copy that over. When you do that, all the other calculations update. Everything else is fixed because we linked it to these cells. And we can do the same thing. Oops, wait a minute. We didn't lock. Let's lock that. Once again, as we fix all of that, it all updates. So let's do the same thing here. This time, let's change it to an absolute reference. Everything updates. Now it matches. Okay, so that's a good way for us to notice that we had something goofy and to go fix it. Let's just go down the income statement and see if anything changed. It's still profitable, so no big change. It was a pretty minor difference, but we were just converting some of the current production to a different product. We weren't changing production. Presumably we're at capacity, or there's some reason why this is the production level that we can do for right now, or maybe that's the market demand and that's the most you could sell, and there's not much of a shelf life for kefir, so you have to sell. Can't produce extra and wait for demand to catch up. Okay, so this is a nice beginning to recommendations you might make for your client, is that if you make some of it into cheese, you're profitable now. If you only sell kefir, you're not going to be profitable until this different volume level, and then of course it's going to be quite a while before you're going to be able to replace your salaries. And you might play around with this percent to inform your client when the percent is some level. That's when you can replace your salary or something like that. So you can play around with the intelligence and decide what kind of recommendations you can make. Remember that just because you produce it doesn't mean that there's sales demand. So be sure to be humble and professional in your recommendations, that just because you dreamed it up doesn't mean that it's correct. So be sure to include in your recommendations any possible flaws in it, any possible limitations, any time that it might change. For instance, if you get above 184,000 in volume, fixed costs may change. You may need more capacity, or fixed costs may change anyway because there's a change in the tax rate or something like that. So the presumption that there would be no changes at all and that this would go out for multiple years is probably not a very good one. All right. So this is a good place to stop the computations. I think we've given you a pretty good jump start on that. Just to review, you are to prepare a one-page client advice memo talking about the volumes needed for the various profitability and target profit levels. Be sure to use English rather than the technical terms. For instance, you'll talk about how many cases you need to make to replace your salaries. You won't need to use the term target profit. That's a technical term that accountants talk about with each other. All right, I look forward to seeing your work.